Everybody, welcome to this episode of Think Business. Looking forward to talking to Dan Eymed, MELD Valuation. Dan, it's great to connect with you. You're the CEO, you're the managing director. I want to give a little blurb on you. Your firm specializes in independent audit-ready valuations for venture-backed startups, venture capital firms. And if you go to the website at meldvaluations.com, one of the things it says is what, and we care about understanding the unique risk profile of your situation, and most importantly, making the quantitative reflect the qualitative story. Okay, so that's where I want to start. So let's talk about risk profile, right? So,
Sure.
Somebody looks at a deal with one lens, somebody looks at a deal with another lens. There's a little bit of art, there's a little bit of science, there's a little bit of gut at assessing risk. I'm a big believer that there's no bad ideas, but there are bad assumptions. And when you layer that into risk, that needs to be layered in. I remember I'm a business coach. I've had my business coaching company for over 10 years, but out of college, I had an internet company in '95, and we are in Detroit and met with Borders Books, and they made an assumption that the internet wasn't really going to be a thing, right? We can point to a lot of companies. Well, that was a bad assumption that probably spilled into risk assessment, yada, yada, yada. So talk about risk and things that you look at as a company, and things that companies need to be looking at with more of a granular lens.
Yeah, thanks for having me, and great question. I love the story about Borders. I often say that the most dangerous thing is what you think you know for sure that just isn't so.
Yeah, that's a good one. Yeah.
And there's a lot of those stories throughout the years. I think, when talking about risk, part of what I do is just comes from experience. I'm sure very similar to your field, working with thousands of companies. I start to pick up little things when I talk to management teams. If a manager, CEO, CFO says, "I hope this happens," well, hope's not a business plan. That's a red flag for me.
Or a strategy. Yeah,
nor a strategy, nor an execution plan. I think part of what we do is taking a story that the person's telling us and trying to back it up with hard data and package it such that it makes sense. When I think about risk, there's always this, depending on who's looking at it, right, and why you're looking at it. A lot of what we do is we start with, well, why are we doing this? Why am I valuing it? Are we valuing it to raise money, for compliance reasons? If we're working for a fund, are we moving positions from fund 1 to fund 2? Is this a secondary we're going to sell to return capital LP? So there's a million reasons why you're doing it. And, part of the risk is, not only intuition, but understanding the market and where things are going, and always asking why.
Yeah.
And just saying, one of the things that I was originally a scientist and trained as a scientist, did research for a number of years. And the question you're taught to always ask is it? I don't know. Is that so? And can it be backed up with any data? Having worked in the venture capital world a lot, and now more so in, I would say private equity, venture capital, sorry to all you VCs out there, but a lot of you are just placing bets.
Yeah.
And a lot of it's based on FOMO. We see that with AI right now.
Yeah.
But private equity tends to be a little more disciplined, and then I feel like even more disciplined when you get into private credit. But,
yeah. Wait, so I want to talk about a couple of things that you just said. Is that so? Those questions, I feel like that's so. If I think about the TV show Big Bang Theory, I feel like as they're scientists, they're always kind of, I feel like, asking those types of questions. But I want to go back and talk about story and data, right? Story, and I want to kind of back up a little bit and talk about backstory, right? Where did the idea come from? How did you determine if, this idea was a good one, if people would pay for it? Looking at all of these kind of different things, and this is kind of a double question, but data is really important. Quantitative data is really, really important. And I think sometimes people forget the quantitative part of the data. And so just kind of touch on that.
Yeah, I mean, I love data, and the more data, I would say, the better. I think, you know, I do get qualitative questions, and my answer is, well, if that's the case, it'll show up in your P&L, won't it? A good example is that we've had a number of Shark Tank clients or Dragon's Den in the UK clients, and they'll say, oh, does that press, or, you know, having this person on our cap table, is that worth anything? And I go, well, if it is, it'll show up in your P&L, won't it?
Yeah.
I think the more data people can provide, the better. Because it just backs up. I mean, I can have a hunch, right? Like a hypothesis, but if I have no data to back it up, well, then your opinion's worth nothing, or your hypothesis is worth nothing.
Yeah.
I mean, I can take the one that keeps coming to mind recently, and I've been talking about it, is the U.S. TikTok deal valued at 14 billion. I mean, that's just, I mean, someone could look at that and say, oh, 14 billion, that's a lot of money. But it's really the most undervalued deal in maybe the history of tech. You know, the private valuation of ByteDance is 350 billion. 20 to 30% of that revenue is US based, which puts the valuation of TikTok probably around 70, 80 billion dollars.
Wow.
So, you know, that's my opinion, right?
Yeah.
But I have data to back it up. It's not just non-informed information.
Yeah.
Right. And so, and then when I think about data, I think, well, where is it coming from? What's the quality of that data? And then, you know, in terms of what we do, if I look at a company's P&L or balance sheet, we're running a host of regression statistics on it, and just seeing what comes out. You know, what is, you know, where's the growth? What correlates with the profit? You know, I like to get nerdy with it.
I love it. Wait, I want to talk about something you just talked about. So we're talking about gut, we're talking about data, right? How we, you know, quantify things. AI is changing the game a little bit, meaning the shelf life of data and the shelf life of consumer patterns and the shelf life of gut instinct, right? So what I think today, based on how fast technology, you know, specifically AI, is changing the game, it's changing forecasts, it's changing, you know, a 10-year model. I frankly don't know how anybody runs a 10-year model today, because the technology every year is just going to be, you know, mind-boggling how it's going to shift companies in the world. And so just kind of talk about kind of like the check-in point that maybe you do and that all companies should really do to test their gut, the data, their instincts, technology, and how far is the shelf life today?
That's a great question. I mean, I've always said, even previous to AI, 10-year forecast is a little bit silly in a way.
Yeah.
Because seeing past 5 years, let alone 3, is hard, right? And you know, unless you're a company like Walmart and you have years and years and years of stable revenue and earnings to judge it against. You know, and as far as AI's intervention, I think it's great. I mean, you know, I mean, I think there's simple things to look at too if you're looking at a forecast. First of all, startups, they're nonsense.
Yeah.
They're dumb. But I mean, once you get a company has revenue, has you know, they're a little more grown up. You know, when I look at a forecast, I also look back at historical performance. Has the company ever hit this revenue growth rate? And if they haven't, then I already have my first question for management. How are you going to do that, and what's different? One thing that I don't see. I think, you know, and I think the advent of AI will be really interesting, because it'll be able to, let's say you're in a B2B SaaS company, and AI can digest all the information that's out there and spit out here's your most likely forecast based on where you are, your operating metrics, maybe even qualitatively the team you've put together, right?
Yeah.
Bake that into a forecast. And so it'll be really cool and interesting from my point of view to see how credible these forecasts end up being, because maybe they're more spot on than pie in the sky kind of forecasts that I get sometimes, right?
Yeah.
And I know most companies kind of do, our stretch goal, our moderate, and our our downside case. I think AI is great. I mean, it's changing my business too. It's changing everyone's industry.
Yeah.
Like there's a few industries, right? AI is not going to mow your lawn or re-roof your house, but
Maybe.
the robots are coming for it.
No, right.
Yeah, but I still, Anyway, my wife still gets a manicure by a person.
We will see. All right, so let's talk a little bit about your firm. You guys provide services to public and private health companies, investment entities, individuals.
Yeah.
And so people come to you when? At what point?
Good question. A lot of the time we're foisted upon you. You're told by an attorney, an auditor, an investor, we got to have a third party look at this. And that could be for a number of reasons: fundraising, audit, compliance. We work with a lot of founders for gift and estate tax issues. So qualified small business stock. I'm sure that's pretty relevant for your audience. QSBS. They'll do trust stacking. There's a great company out there called Dynasty. We work with great attorneys who do that for a lot of executives and founders. And so, there's a lot of different reasons why we end up working with people or companies or funds. I mean, funds is always compliance based for audit, and then companies and founders is a variety of reasons. But like I say, sometimes we're foisted upon you. Your auditor or lawyer tells you, you got to go talk to Dan. They're like, oh, no.
Yeah, no, I get it. I want to talk about data a little bit more because I think it's an area that it's I think more multidimensional than most people think, because there's a lot of different lenses and a lot of different angles we want to get data from today. And so can you just kind of talk on that, right? So it's like I used to be in commercial real estate, and I sold apartment buildings, and then I ran an office and in commercial real estate. But the appraisers had multiple lenses on how they underwrote a deal, and then the lenders and the banks had different lenses on how they looked at deals, and so just kind of talk about all the different ways that that business owners today, and the way that you look so they can see both sides. How are you looking at all of this? What type of lens do people need to look at when it comes to data?
I mean, you make a great point again, and that being, why am I looking at this? Right. What's important to me? Are we looking at growth metrics? Are we looking at risk metrics? I think, again, like I tell a lot of our clients, our job is first to start with the why, and then build. We're building a house, and the data is the framing, it's the infrastructure, it's everything that goes around these into the argument of why are we looking at this, or why is this worth X amount? Why is this worth $5 billion? And frankly, there are valuations out there that blow my mind that don't make sense to me on a data basis, right? And again, back to your point about lenses. Well, the investor's looking at through two different lenses. One, this could be a valuation that you're growing into. That happens quite often, right? We expect you to be here in 5 years, at which point we're going to exit the investment, meaning you're going to sell the company. Or it could be just based off the size of the market, right? So they may be viewing it through that lens. Oh, this is such a huge market, such huge potential. We think it's worth X once we back into it based off these kind of macro numbers. And there's even publicly traded stocks that don't make sense to me, right? Palantir trades at 240 times LTM revenue or something. That's crazy to me. That seems overvalued. Yeah. I think that there's two factors. I mean, when it comes to data, it's data plus AI, and I think both of those tools need to be in a business owner's toolkit. Small business owners, middle market business owners, and AI is coming for us, and we need to adapt or die.
Yeah.
I'm learning as much as I can about AI and the way it integrates with data, the way it's going to work in our valuation company, the way that I can help you as a business owner or as an individual who's doing estate planning. I think, and also there's nothing more valuable to me that I know of than data.
Yeah.
Yeah.
Yeah. Quick question on data. So you have all this data and it's telling you, hey, all the data is pointing to this, right? But my gut is telling me this, right? This whisper in my gut is telling me this. And sometimes it can work both ways. Out of college, with my brother and a buddy, we started an internet company and we sold it. And we sold to the largest largest internet professional service firm in the world.
Nice.
And we hired a guy who was, a CFO type to come to lunch, dinner with us and meet with the company. And he said, if you sell your company, it'll be the biggest mistake of your life. We said, thank you very much, paid him for his time, and we sold our company and it was the best decision we ever made in our lives because our guts knew that just because everything didn't line up, we understood from a gut perspective and where things were going. So it can work both ways. All the data can say yes and your gut says no. All the data can say no, but your gut says yes. So how do you kind of, reconcile that?
Well, I mean, that is a good point. There's two things. One, I think gut intuition is not to be ignored.
Yeah.
Especially if you have experience. I've never regretted anything that I have done, but I've regretted some decisions I didn't make or execute on, ignoring my gut instinct, right? And I think that, while I don't have a scientific explanation for you, something's happening in our neuroscience that's synthesizing data from all points and saying this is where you need to go.
Right.
Yeah, and I also think experience is not to be discounted. I think FOMO, I think that's something that needs to be thrown out the door. Don't worry about missing out. Maybe you will. I've missed out. Yeah. We all have. Yeah. We can all point to the deal that passed or the partnership we didn't execute on or whatever. But having your true north, I think, is important too. And that what do you want? I mean,
well said. There's a new thing. It's called, you've mentioned FOMO a couple of times. Something called ROMO, right? Relief of missing out. So something there. All right, Dan. Quick speed round. Book that's had a big impact on you.
Oh, I mean, the one that's coming right to my mind is The Subtle Art of Not Giving a Fuck.
Okay, it's a good one. Yeah. All right, good. Best piece of wisdom you've ever received.
Geez. The best piece of wisdom I've ever received is to do the best you can each day and let the results fall where they may.
Yeah.
That way I can look myself in the mirror and say, I did everything I could today.
Yeah, I love it. Finish the sentence. One piece of data that every company should know if they get woken up at 2 a.m. Is.
That's a tough one. One piece of data?
Yeah, one piece of data.
Oh, okay. How many customers do you have?
That's a good, okay. Know that question. All right, good. Tell everybody who your ideal clients are and where they can connect with you, Dan.
Yeah, absolutely. You can reach out to me on LinkedIn or email me at dan@meldvaluation.com or find our website. Executives, founders on the gift and estate side, middle market companies, venture-backed companies, private equity-backed companies, and then private credit, venture, and private equity funds. All of those.
Good.
Yeah.
Good. And your website is meldvaluation.com. Dan, can't thank you enough. This was great. I loved everything you shared about data, about not to ignore your intuition, your instincts, and just what makes, how to look at your business and the numbers and the art and the science. This was great. I think community, if Dan can help you, please reach out. Dan, this was awesome. Thanks so much.
Yeah, thanks for having me. It was fun.
Thanks.